Ever wondered what would have happened if you had invested $1,000 in TSMC back in 2018? Today, in March 2024, your TSMC investment would be worth $3,705, a 271% increase, and an annual growth rate of 30%. In this video, we will be dissecting the financial and business situation of TSMC, a leading chip manufacturer based in Taiwan, listed on the NYSE under the ticker symbol TSM. Stay tuned as we delve into the financials of TSMC. Let's jump right into the numbers. TSMC's 2023 revenue was $68 billion, a slight decrease from 2022's $71 billion. However, the overall picture of TSMC's financial health isn't painted by a single year's revenue. Since 2018, TSMC has been growing at a steady clip, boasting a compound annual growth rate, or CAGR, of 16%. Let's break it down a little further. The revenue sources for TSMC are diverse, reflecting its position as a world-leading chip manufacturer. Of the total revenue, 43% comes from high-performance computing, 38% from smartphone components, 8% from Internet of Things devices, 6% from the automotive sector, and the remaining 5% from various other sources. Geographically, TSMC's revenue distribution is also quite varied. 7% of its revenue comes from Taiwan, its home base. The lion's share, 65%, comes from the United States, a testament to the strength of its international market presence. China accounts for 12%, while Japan contributes 6%, and the remaining 10% comes from other markets around the globe. Year on year, TSMC's revenue growth has seen some fluctuations. From 2018 to 2019, it was 4%. From 2019 to 2020, it jumped to 25%, followed by 19% growth from 2020 to 2021. The most significant leap was from 2021 to 2022, with a remarkable 43% increase. However, from 2022 to 2023, the growth rate dipped to -4%, signaling a slight contraction. However, it's worth noting that despite this dip in 2023, TSMC's revenue has been on a consistent growth trend. This reflects the company's strong and steady performance in a highly competitive and rapidly evolving industry. Stay tuned as we delve deeper into TSMC's financials in the next scene. Despite a slight dip in 2023, TSMC's revenue has been on a consistent growth trend. Now, let's take a look at TSMC's profit margins. In 2023, TSMC's gross profit margin was 54%. This is slightly higher than their 5-year average of 52%. It's a testament to TSMC's ability to maintain a strong and consistent profit margin despite the ever-changing market landscape in the semiconductor industry. Let's now turn our attention to the cost ratios. In 2023, the ratio of research and development to revenue was 8%, while the sales, general and administrative expenses to revenue ratio stood at 3%. This consistency in cost ratios, maintained from 2018 through 2023, speaks volumes about TSMC's effective cost management strategies. Now, onto the net profit margin. In 2023, TSMC's net profit margin was 39%, slightly higher than the 5-year average of 38%. This again highlights the company's ability to turn a significant portion of its revenue into actual profit, enhancing its financial health and stability. Let's not forget about the net profit. In 2023, TSMC's net profit was $26.4 billion. Although this figure is lower than the $32 billion they achieved in 2022, it's important to note that the company has maintained a consistent compound annual growth rate of 19% since 2018. In other words, despite the slight decrease in 2023, TSMC's net profit has been on a consistent growth trend. This suggests that the company has been quite successful in managing its expenses and generating a profit, regardless of the challenges it faces. In conclusion, TSMC's financial performance in terms of profit margins and net profit demonstrates its robust and resilient business model. It's a company that has proven its ability to navigate through market changes while maintaining strong profitability. This is an important factor to consider for anyone looking at the long-term viability of their investments. Even with a slight decrease in 2023, TSMC's net profit has been on a consistent growth trend. Let's take a look at the asset situation of TSMC. In 2023, TSMC's total assets were valued at $174 billion, showing a considerable increase from the previous year's figure of $156 billion. This growth in assets signifies a stronger financial position for the company. Now let's talk about net assets. These represent the actual ownership interest in the company after all obligations are paid off. In 2023, TSMC's net assets were valued at $110 billion, compared to $93 billion in 2022. This increase in net assets is a positive sign for investors, as it demonstrates that the company is growing its wealth over time. On to liquidity, a measure of a company's ability to pay off its short-term debts. One way to gauge this is through the current ratio, which compares a company's current assets to its current liabilities. In 2023, TSMC had a current ratio of 2.4, up from 2.17 in 2022. This indicates that TSMC had more than enough resources to cover its short-term obligations, which is always a good sign for potential investors. Another useful tool for assessing liquidity is the quick ratio. This ratio excludes inventory from current assets, providing a more stringent measure of liquidity. In 2023, TSMC's quick ratio stood at 2.13, higher than the previous year's ratio of 1.94. This suggests that even without considering its inventory, TSMC could comfortably meet its immediate obligations. All these figures and ratios paint a picture of a company with a solid asset base and good liquidity. This bodes well for TSMC's ability to weather financial storms, invest in growth opportunities, and provide returns to shareholders. In conclusion, TSMC maintains a healthy asset base and liquidity. This is a strong indication of the company's financial stability and its capability to meet its financial obligations, making it a potentially safe and profitable investment option. Now let's look at how cash flows through TSMC. Understanding the movement of cash in any business is crucial. For TSMC, the operating cash flow in 2023 was a staggering $39.1 billion. That's a compound annual growth rate, or CAGR, of 17% since 2018. Impressive, isn't it? But let's not stop there. The free cash flow, which is the cash a company has left after it pays for its operating expenses and capital expenditures, was at $9.2 billion in 2023. This shows a CAGR of 2% from 2018. But why is the growth of operating cash flow faster than that of free cash flow? This discrepancy can be attributed to TSMC's consistent investments in new production technologies. These investments are necessary for TSMC to keep up with rapid technological changes and maintain a competitive edge. Now let's shift gears a bit and delve into the DuPont analysis. This method allows us to dissect TSMC's return on equity, or ROE, into three components: net profit margin, asset turnover, and equity multiplier. In 2023, TSMC's ROE was 24%. The net profit margin was a healthy 39%, indicating a high level of profitability. The asset turnover was 0.39, showing how efficiently TSMC uses its assets to generate sales. And the equity multiplier, which measures financial leverage, was 1.59. So how does this compare to 2022? The ROE was higher at 34%, with a net profit margin of 45%, an asset turnover of 0.46, and an equity multiplier of 1.68. This indicates a slight decrease in efficiency and profitability, but TSMC's financial health remains robust. TSMC's cash flow situation and DuPont analysis indicate a robust financial health. So, as we can see, TSMC not only has a strong cash flow position, but also demonstrates a commendable financial performance, as evidenced by the DuPont analysis. To sum up, TSMC shows a steady financial and business performance. Over the years, it has demonstrated a consistent upward trajectory in revenue, growing at a compound annual growth rate of 16% since 2018. Despite a slight drop in 2023, the overall trend points to a healthy expansion. The company's profit margins have also remained stable, with a gross profit margin of 54% in 2023, slightly above the 5-year average. This stability extends to their net profit margin, standing at 39%, reflecting efficient operations. In terms of assets, TSMC's total assets in 2023 amounted to $174 billion, indicating a robust financial position. The current ratio and quick ratio, both exceeding 2, suggest that the company has a strong liquidity position. Cash flow analysis reveals a growing operating cash flow, increasing at a yearly rate of 17% since 2018. However, The slower growth of free cash flow indicates significant investments in new production lines to keep up with rapid technological advancements and maintain a competitive edge. Lastly, the DuPont analysis uncovers a return on equity of 24% in 2023, driven by a healthy net profit margin, asset turnover, and equity multiplier. Thank you for watching. Don't forget to subscribe for more company analyses and comment the companies you are interested in.